I have a question about disability insurance. Guardian tends to have the highest premiums for disability insurance, and I read online that is because Guardian has the best definition of disability for physicians, especially for those that are doing procedures. But I've also read online that the Guardian has among the highest commissions in the disability world. I'm wondering if the increase in the price for the Guardian policy is worth it, and that it's worthwhile in regards to the definition of disability, or if this is just going towards the insurance agent's commission.
All right, Ron wants to know whether Guardian costs the most because it's the best, or because it pays you the most. Yeah. Let's talk about commissions and how they vary between companies, and then about Guardian specifically.
Well, I'm going to peel back the curtain here. So this is why you come to White Coat and you try to get the truth about all this, right? So a lot of the insurance companies are going to pay the exact same commission first year. So they're going to pay 50% plus some overrides, what they call it. It probably gets up to about 70% of the first year premium. And that goes to a broker, someone who helped you hopefully do a good job of checking out all your options in an unbiased way like we do at Pattern, and make sure that you get the right policy and the right price. So that's how they get paid. What happens after that is there are renewals that kick in. So every year they get paid a little bit of something to service your policy. You kind of want them there in case you need to increase your coverage. You have questions about the policy. You need to go on a claim. It's good to have someone there who's not at the home office of an insurance company. Because calling there, they're looking out for the insurance company. So you want to make sure you have someone on your side who's kind of looking out for you. So they do pay a little something. Those can vary those can be quite different. Guardian typically pays a lot on renewals, and not only that, it pays into perpetuity. It never ends. Companies like Principal pay you close to the same amount as Guardian, depending on the level of volume that you do in selling this kind of product. But then at year 10, after year 10, it literally drops to almost nothing. I think it goes from like 10, 12, 15% to 1. So there are definitely some people out there, and I know them. I get invited to all these, swanky events with all these insurance companies, and I can't stand them too much, but I go to them anyways, and sometimes I even speak at them. But I hear these people who drink the Kool-Aid from any of these companies, and all of the companies have Kool-Aid drinkers. We're the best because of this. We're the best because of that. And when I get down to it, your question's kind of insightful. There are a lot of times financial reasons that some companies are sold above others. Now, let me step in and say, though, Guardian is absolutely it's the highest rated company of all the true own occupation companies, the big six. And they have the longest tenure, the best track record in a lot of regards. So there's some Kool-Aid to be drunk there that's not bad Kool-Aid. It's pretty good. But at the same time, you want to make sure if you're talking to someone about a policy that you can ask them questions like this. Well, how do you get paid? And are you being financially motivated in any way by this? If someone's selling your Guardian policy, they should tell you, well, they pay me the first year the same amount, and for 10 years about the same amount, but they'll pay me more beyond that to keep servicing your policy. And so, hopefully that's not going too much into their reasons for their motivation for recommending Guardian. But I would say from they have two different policies. Guardian has kind of a Cadillac package policy that's super expensive. And all the Guardian Kool-Aid drinking brokers or agents out there want to sell you that because they're saying you have to get the absolute most robust, top level policy you can get. And then they've got another policy that's about half that price. And it's still at that half price point, that less robust policy. It's still on par with Principal and Emeritus and some others and a lot of their features. So it's not a bad policy. And to tell you the truth, we work with a lot of doctors who take that one. So I would say when you're thinking of Guardian, absolutely top notch. Certainly want to know the two options between their most expensive and their least expensive option. They're both still true own occupation with that 50% procedures definition. So very, very similar policies. But I would say that most of the good brokers out there are not selling it because it benefits them. But some of the long-term folks who are in this for the long haul, they see the benefits of selling it. They might be doing it because of those renewals lasting all the way into perpetuity.
If you want your questions answered by the White Coat Investor, record your question at whitecoatinvestor.com/YQA or click the link in the description.